The broadcast is now starting. All attendees are in listen-only mode.
Good evening, friends, and welcome on this special webinar on under Companies Act 2013. Various new initiative and various new amendment came in our profession, and this continues for this Index part as well. So we all have to update ourselves. So we always try at Connect Easy to provide the update and amendment on timely basis, and we are very thankful to our uh, both the speakers today. Our keynote speaker, CA Chintan Patel sir, regional council member and chairman at WRC for this committee as well. So thank you so much, Chintan bhai. Chintan bhai is always available for profession. He has recently won our WRC election with the second highest votes from Ahmedabad, and he is always available for profession and particularly for us as well. And on multiple times we have invited sir, and sir is always ready for us as well. Thank you, Chintan bhai, for coming again and again on our platform. We are very thankful to you. He's expert on the topic, and whenever we schedule session on Companies Act and related matters, accounting, and like Schedule 3, so we came only a one name, Chintan bhai. So we very happy that Chintan bhai is addressing from our platform once again today. So we welcome you, Chintan bhai, and we have our today's guest speaker, CA Paras Jain sir. We welcome Paras sir, and thank you for making this possible entire session. We have our coordinator, CA Gauri Pednekar madam, CA Ronak Khandelwal, who is also very active in our profession. So would like to first request CA Ronak Khandelwal to introduce our today's chief guest and keynote speaker, CA Chintan Patel. So over to you, Ronak bhai.
गुड इवनिंग। सबसे पहले तो मैं धन्यवाद देना चाहूंगा सर विराज भाई का, एंड चिंतन पटेल सर CA already, and CPA USA, and CISA, DISA, and DRM, and past regional council member, and also second terms, and second past chairman of ICI Ahmedabad, and 15-year, more than 15-year experience in IFRS, US GAAPs, NDAS, and in internal controls. Or Chintan Patel sir is partner in नरेश जे पटेल एंड कंपनी, और इससे बहुत ज्यादा है चिंतन पटेल सर के लिए बोलना कि उन्होंने बहुत सारा एक्सपीरियंस ले रखा है, 100 कंपनीज में एनडीएस इम्प्लीमेंटेशन किया हुआ है, वो सारी चीजें की हुई है। तो मैं अब चाहूंगा कि चिंतन पटेल सर आए और हमें कुछ एडवाइस करें कि न्यू कंपनीज एक्ट में क्या क्या अमेंडमेंट हुए हैं और न्यू शेड्यूल 3 में क्या क्या नई चीज आने वाली है, उन सब चीजों के लिए। बिल्कुल विराज भाई।
Virag, you're mute.
Thank you, Chintan bhai. Thank you, Ronak bhai, for the introduction, and would like now request CA Chintan bhai to address the attendees.
Thank you so much, CA Virag Shah, the founder of Connect Easy, and your friend, CA Ronak Khandelwal and CA Gauri Pednekar, the coordinator of the session, faculty of the session, CA Paras Jain. And let me first congratulate Connect Easy for addressing one of the most important topic. At WSF-ICA, we are trying to ensure that we can create maximum awareness of the change in Schedule 3. See, the Paras Jain, who is a faculty, is going to discuss on the topic in detail. My focus is to really put upon the various key changes which are being there, and I'm sure that these are the something which we must address on priority. We're talking about the first foremost is the requirement of providing aging schedule. As you all are aware that this is effective from financial year 2021-22. So today we are trying to prepare and finalize financials for 21-22. and with comparative, that is financial year 2021. So the changes which we are going to discuss is not only for 1 year, it has to be for 2 years because comparative is required. Because Schedule 3 says that every figure in financial should have a comparative figure. With this reason, we need to understand the changes brought down by Schedule 3 are not only for 1 year, but we also have to look at the 2 years figures. Let me take this talk about a few very important changes which I, in my view, are applicable to every companies, even though they are small and medium-sized companies. First very important point is rounding off. Earlier, companies are not habituated to do rounding off for the figures in lakhs, thousands, or crores. It was abnormal for the companies to do rounding off. And in majority of the small medium-sized companies, management do not like to do rounding off because they want to match and tally every paisa. They want to report also every paisa. However, in this scenario, rounding off is made compulsory. So there are particular issues, at least for a small size practitioners or the companies which are small size, they need to also look at certain kind of Excel or some software tools to ensure that the rounding off can be made easily because there can be casting issues may be involved. Coming to the next important point, which I feel are very important, is with respect to the loan and borrowing. The change which requires that in case a company has taken working capital borrowing based on the security of current assets. In that case, if a company is required to provide quarterly statements or returns to the bank or financial institutions, management has to report in the financials that the data or information which is provided to the bank, they are tallied, they are in compliance with books of accounts. We have seen and observed in various cases that the companies are tempted to inflate the figures just to get a more overdrawing power. Now, in that case, the management is under compulsion to really look at, check, and in case of non-compliance, where the figures in financial statements and figures in the statement provided to bank, they are not matching, they need to provide in a report, and they don't mention that yes, I have submitted my stock of 30th June 2021 as rupees of 10 crore. However, as per my books of account, the stock is not 10 crore, it is a 9.2 crore rupees. So that is a difference of 80 lakhs rupees. And that difference of 80 lakhs rupees, what is the reason of the difference? Why the figure which I have submitted to the bank is different than in his books of accounts? That kind of disclosure is one of the most important disclosures, and in my view, this will have a huge implications as far as the loan is concerned, because that also questions marks on the ethicalness of the particular management, that why management is providing the wrong information. So this is something where the practically management need to understand. In case if it is not being compliant with it, this is a time for all of us to educate our clients that please take care of now onwards to ensure that the figures which are submitted in books of accounts are in compliance with this requirement. Now when I look at the overall understanding, overall perspective of why these changes are done, you will see that many changes are being done based on the fraud which are recently done. When Companies Act 2013 was modified, at that time there are a lot of provisions of auditor rotation. There are a lot of provisions on the accounting thing which auditor can do, cannot do it, and they are stemmed from the nothing but was Satyam scam, because Satyam fraud was happened, and then the change in the Companies Act, and then in Companies Act 113, the various provisions are just to ensure that the investors, stakeholders claims are not being affected. After Companies Act 2013, we have seen that many cases, and a few very important are the Nirav and Mehul, plus Vijay Mallya and other cases where the fraud has been happened and they have fled the country. So when you look at the amendments, you realize that there are few very important changes are done to ensure that these kind of events should not happen. And insolvency bankruptcy code has been there. When the liquidation was happening, At that time, it was realized that even though the figures have been submitted, it is on the books of accounts of the company. However, the banks are unable to fetch the figure. So these practical issues, challenges, and the recent fraud which is happening has given a lot of information to the government. We should have the reporting. That reporting should be in line with the requirement. So there is also another additional requirement which talks about the providing the reporting of fund circulation. In case if the fund has been circulated from company A to company B, not for company B but for a company C, so then the company which is receiving and company which is giving, they both need to provide disclosure in financial statements that the fund which I have given to you are not for you but however for other company. So that kind of disclosure will ensure the trail of the fund should be visible and to the stakeholders of company. If I just talk about one more point, that is on aging analysis. So far, so good. We have seen that for trade receivable, only one aging is less than 6 months, more than 6 months for so many years. And if I tell you that if there's 10 crore rupees is the amount of trade receivable, out of 10 crore rupees of trade receivable amount, 4 crore is more than 6 months, it is not going to put any question marks on the face of company, because in today's scenario, it's possible that the aging may have a more than 6 months is like 4 crore rupees. But there's no further classification which is required. However, now under this amendment, the trade receivable aging has been further classified, sub-classified to various more aging buckets. Same is the requirement for trade payables. Same is the requirement for capital working in progress and integration and development. So this aging will provide more insights on the information with respect to the quality of the receivable, the cash flow cycle of the company, and also with respect to the amount which may be window dressed by not doing impairment testing as far as CAIIB is concerned. So I think these are the very, very important critical information which are going to be on the face of the financial statements. You will just look at a few more important changes before I hand over the charge to the faculty, CA Paras Jain, who is there. More on a presentation point of view, because this is again going to be affected to various companies. In case if a company is taken a long-term borrowing and the current portion of long-term borrowing which is to be disclosed as a part of other current liability earlier, now it has to be classified as part of a short-term borrowing. Financial ratio analysis, 11 ratios to be disclosed. So I think if you just look at there are around 28 to 30 changes are there, which are small, medium-sized changes, and every change is very critical for all of us to understand before we look at compliance of the Schedule 3, before we sign off the financial statements as auditor report, and ensure that the objective, the purpose for which the changes are done are appropriately addressed. So with this brief word, my compliments to each one of you, and primary Virag Shah for handling these kind of seminars, and my best wish to each one of you to ensure that the session is relevant, more important, and please ensure that the compliance is done appropriately, and don't do any copy paste. At least for this year, please be sure that you are using the revised format financial statement. Plus, there is a change in the CARO reporting. So the CARO reporting is also a revised one. So these both CARO and Schedule 3 need to be again seen together when we talk about the changes. With this brief word, thank you once again, Virag, for giving the opportunity and inviting me here. And now hand over charge to you.
Thank you so much, Chintan bhai. It's our pleasure to have you here. Before I request again Ronak Khandelwal for formal vote of thanks, would like to tell everyone that Chintan bhai has taken a great initiative to create a course relating to this amendment in Schedule 3 for the financial format for financial year 2021 as well. And its entire course is available on Udemy. And Chintan bhai is great enough to give a discount on, or we can say a special coupon code, a special 50 for all the attendees who are attending today. So you can go on Udemy. There is a link also we will post in the chat box in some time. so that you can take that course and have a entire session. It's a around 30-35 session course that you can take, and even your colleague and employees can take the benefit out of this. Would like to thank you, Chintan Bhai, for this wonderful initiative. That as per their convenience, they can watch from the Udemy, and it's a very wonderful and very reasonable price. Like it's 499 for entire 30-35 session. So would like to request everyone to take the maximum benefit of this. And now would like to request here Ronak Khandelwal to give a formal vote of thanks to our regional council member CA Chintan Bhai Patel. So over to you, Ronak Bhai.
Yes, sir. चेतन पटेल सर, आपका थैंक यू फॉर कमिंग एंड बट सर मैं एक थोड़ा सा और तकलीफ चाहूंगा सर से, एक क्वेश्चन भी रखना चाहूंगा सर के सामने, यदि आप इजाजत दें मुझे तो इस चीज के लिए
प्लीज।
सर मैं सिर्फ मेरी साइड से और लोग भी आजकल ये बोल रहे हैं इस साइड से, सर कंपनीज एक्ट में एक अमेंडमेंट ला करके 2 साल से उसको डेफर किया जा रहा है कि ऑडिट ट्रेल सॉफ्टवेयर लाना पड़ेगा इस चीज के लिए और उसका यूज करना पड़ेगा। बट मेरा एक क्वेश्चन ये है कि क्या गवर्नमेंट सर रात को 9 बजे लास्ट डेट के दिन एक नोटिफिकेशन ला करके उसको डेफर कर देती है, तो इसका क्या रीजन है कि भाई 9 बजे ऐसा चीज हो रही है? तो आप तो तैयारी तो हम कर चुके हैं ऑलरेडी इस चीज के लिए, इसके ऊपर आपका कमेंट चाहूंगा और बाकी आपको थैंक यू फॉर कमिंग।
Sure, Ronak. I think you really raised one very important question, and the government is very keen to comply with the changes as well as possible. And as you are aware, the audit trail is not very easy because there has to be support from every software vendors. There are few software vendors who may require a short period of time, and there are few software vendors who may require a larger period of time to ensure that they are updated with the requirement. Last year, government has mentioned that the audit trail should be effective from 1st April 2021. That was deferred because the time was very short, and effective from 1st April 2022. But however, again, see, this is a change which is not something affecting only a small part. It is affecting everyone. Because there are hundreds of software in India market. Every accounting software needs to update their software so that the feature in their software should be able to comply with this requirement. And many software companies has made request to the MCA for giving the extension. And the objective of giving extension beforehand was there because from 1st April 22, if the extension is not been given, then the CAIIB requirement under auditor says that they need to talk about and non-compliance of this auditor requirements. So this is for the purpose of benefit of every small medium-sized companies and also software vendors so that they can get more time. But in my view, this is a very big change. The way we all are habituated in India to make changes in accounting software, I think we need to gear up ourselves to ensure that once the entry is done, it is done. Because Tally, other softwares are such where we can modify it better also. ERP may not allow it. So in India, we don't have that kind of habit to have one final time entry. But now audit trail, which is in place, plus the Schedule 3 amendments, which where the companies are required to verify certain figures about the figures which they submitted to the bank and look at the compliances. I think this is going to ensure that the nuts and bolts of the accounting has been fixed appropriately so that the persons who are not complying with the requirement to be taken at task. So the extension in my view is good. It's a welcome step. It has been done last moment because there are many software companies may not be ready to comply with this requirement. So what is done is good.
Yeah, again, once again, thank you, person. Yeah, Viraj.
Thank you, Chintan Bhai, for addressing all the attendees, and would like to request once again to take the course from Udemy and use the coupon code special50. We'll share the exact link in a chat box in some time. And now we would like to invite CA Gauri Pednekar. She is our coordinator, and also CA Ritika Pate, our another coordinator. So would like to request CA Gauri Pednekar for the introduction of CA Paras Jain. So she is very young and dynamic chartered accountant, recently qualified in 2018, and since 3 years she has experience in PwC. Currently, she is working at Sandesh as Desai and Company from Navi Mumbai. So, I'd like to request Gauri ma'am to introduce our today's speaker. Ma'am, you are on mute. Please unmute yourself, ma'am. Not audible, ma'am. Not audible. You can use the other device. Or you can use from mobile also. You can unmute yourself from mobile. Yes, ma'am. Please continue.
So thank you for giving me the opportunity to introduce CA Paris Jain sir. He's from FCA. He also has a diploma in IFRS. He has more than 11 years of experience in work industry. He has vast experience limited. Currently, he is working as a senior manager finance in Blackbox Limited. CA Paris Jain sir will be explaining in detail amendments in Disclosure Companies Act. This is covering the new disclosure requirements as per the policy for the Indian Indian accounting compliant companies and practical information. I request CA Paris Jain sir to take over. Thank you.
Sir, you can share your screen now, sir.
Please send the share screen link.
Yes, sir. We can see your screen, sir.
So now it is visible.
Yes, sir. Yes, sir. Sir, just make it a slideshow mode or full screen mode, sir. Yeah, perfect, sir. Thank you, sir.
Now, okay.
Yes, sir. Yes, sir. Please continue, sir.
Yeah. Good evening, everyone. Thanks for joining today's session. Today's session is on amendment in Schedule 3 of the Companies Act. MCA has come up with the notification dated 24th March 2021 regarding some amendments in Schedule 3. Schedule 3, which are applicable from 1st April 2021. And so we are required to give current year financials with previous year numbers also for these amendments. So in Schedule 3, there are 3 divisions. Division 1 is basically for companies following accounting standard. Division 2 is for Ind AS companies following Indian accounting standards, and Division 3 is for NBFC companies. So today we are discussing about Division 2 companies which are following Indian accounting standards. These amendments are applicable from 1st April 2021. So we are required to give current year numbers with previous year disclosures also from this year. In financial statement comprises of 5 parts: balance sheet, statement of profit and loss, cash flow statement, statement of changes in equity, and notes to financial statement. Schedule 3 deals with balance sheet, statement and of profit and loss, statement of changes in equity, and notes to financial statement. So cash flow statement is not dealt with Schedule 3. So all the changes, I have divided them into the parts of the balance sheet for your easy reference, which all affects which change will affect your balance sheet part, which affect with to your statement of profit and loss, which affect your statement of change in equity, and what is required to be given in the notes. So now let's come to the changes related to balance sheet first part. In balance sheet, security deposit has been regrouped from loans to other financial assets, both current and non-current. Second change was regrouping is of current maturity of long-term borrowings. It has been grouped from other financial liability to current borrowings. Earlier this current maturity of long-term borrowing is shown in other financial liabilities. Now it is regrouped from other financial liability to current borrowings. So now borrowings will be shown at two places. One is at current as current borrowing, and one is as non-current borrowing. Earlier it is shown at three places. So it will be a good for any user to understand how much is the company's borrowing are there. Next change is regarding lease liability. Lease liability has been regrouped from other financial liability to lease liability under financial liabilities as separate line item. After borrowing, it is required to be disclosed, both current and non-current. Then comes to aging of trade receivable. In aging of earlier aging is not required to be given. So now it is compulsory to give aging of trade receivable. Trade receivable aging required is less than 6 months, 6 months to 1 year, 1 year to 2 years, then 2 to 3 years, more than 3 years, and then a total. On the left hand side, it is divided in undisputed trade receivable, considered good, which have significant increase in credit risk, credit impaired, disputed trade receivables, considered goods, similarly, which have increased significant risk and credit impaired. So basically, on the left hand side, there are two categories. First is disputed, and second one is undisputed. If disputed can be meaning of dispute, that there can be a dispute going on with your customer, a court case is going on regarding the collectability, mail exchange are going on, which says that collectability, which says that some amount is disputed. So any mail communication, any written communication, any court cases, all comes under the category of dispute. So if the amount is not receivable, full amount, then it will be shown as a credit impaired. And if we have provided some amount, so suppose 1 crore rupees is receivable in last year, and there is we have provided 50 lakhs out of it, and the risk of that customer has increased. So we now we estimate that only 30 lakhs is receivable. So more 20 lakhs means that there is a significant increase in credit risk. So if it is undisputed, then it is shown at point number 2. If it is a disputed, then it will be shown at point number 5. So one second. So here the format specified by Schedule 3 doesn't specify where to specify the note due amounts. So if we have to match with the face of the financials, then we have to add one more column, note due amount, here to match it with the face of the financials. And then again, this aging will be prepared at a gross basis, and then comes after this gross basis total is required to be matched up. ECL is required to be reduced, and then comes the figure of net trade receivable, and then we are required to add unbilled dues to come at a figure of total trade receivable. And as per Schedule 3 amended, unbilled dues are required to be disclosed separately, and its aging is not required. So what we mean by unbilled dues? We have rendered some service to our customer. We have recorded revenue, but we have not yet billed to the customer. So anything which is unbilled will be shown separately. And if we are not having a credit period with the customer, credit period is not specified in this system, then we can consider date of transaction for this aging purpose. So there can be two issues. One is credit period is not specified in the system, and one is settlement of the receipts is not done in the system. Then aging will not come proper. So for credit period, schedule says that if credit period is not specified, you can consider date of transaction for this aging purpose. So if settlement is not done, then some amounts will come negative in one column and some amount will come as a positive. So that will create a problem. So that management has to take care how to give a correct aging. So next is aging of trade payable. Similar to trade receivable, aging of trade payable is required, but in trade payable there is one column less, that is less than 6 months. Here it starts from less than 1 year. So it is less than 1 year, 1 to 2 year, 2 to 3 year, and more than 3 years aging buckets are given. So these are also required to be calculated from the due date of payment. So if due date of payment is not specified in this case also, it will be date of transaction will be considered for this aging purpose. And here also in the left hand column, it will be bifurcated in MSME, other, disputed dues, MSME, disputed dues, others. So above two categories are of undisputed and below two are of disputed dues. So here also unbilled dues are required to be disclosed separately. Unbilled dues of which we have not received invoice, that will be considered as unbilled dues, and aging of that is not required. So if you will add your, one second. So in this, you are not required. You have to add unbilled dues.
Bharat, it's clear now. Please continue.
Okay. So I was telling here in MSM, in aging of trade payable, we are required to give disputed and undisputed dues. Disputed is, again, there is any dispute going on with the customer or any court case is filed or something like that, that will be considered as disputed dues. And then this total will match with the numbers which we are showing on the face of the balance sheet. Here the schedule does not specify where to give not due amount. So to match it up with the financials, we are required to add one more column as a not due and give it before in the table. And unbilled dues are different, are like GIRR provisions. They are such kind of things of which invoice is not received yet. So these are required to be shown separately, and these are different from provision. A provision is basically a liability of uncertain amount or timing. So there is no certain amount is involved, whereas in trade payable amount is certain or timing of payment is certain. So that is the basic difference between unbilled dues from provision and trade payable. Next comes the aging of trade capital work in progress and intangible asset under development. So under capital work in progress, intangible asset under development, we are required to give again aging buckets are same as trade payables, less than 1 year, 1 to 2 year, 2 to 3 year, more than 3 years, and total. So what all projects are going on in progress are progress and project temporarily suspended will required to be shown in the first table, and its total should match with the CWIP or intangible asset under development shown on the face of the balance sheet. So for the second point, if any completion is overdue or has exceeded its cost. What is overdue here means that suppose project is expected to be completed by 31st December 2021, but by the end of 31st March 2022, it has not yet completed. So it will be shown separately in table 2 as how much is project which is overdue, how much amount is expected to be spent in next 1 year, 1 to 2 year, 2 to 3 year, and more than 3 years. And similarly, project which has exceeded its cost, we have estimated a cost of around 10 crore is expected to be incurred, but till date we have incurred 12 crore, so it has exceeded its cost. So it will be shown in second table how much is the cost exceeded and how much more cost are required to be incurred in next future periods. So this table 2 is basically gives detail about future cost to be incurred, whereas table 1 gives already incurred cost. So then the projects which are permanently suspended are required to be given separately. So here hello. Here the project will be divided in two categories: active project and inactive project. Active projects under inactive projects also project will be divided in two categories: permanently suspended or temporarily suspended. If project is permanently suspended, then it will detail of that is required to be given separately. And if project is in progress, then and temporarily suspended, then detail is required to be given in table 1. What is temporarily suspended? Temporarily suspended is taken from meaning of that we can take from Ind AS 23 that says that due to any government approval you have stopped your project, or due to there can be reason, very good reason, COVID had come, due to which we have to temporarily suspend our project. There can be any reason for that, for suspension of the project temporarily. So now these earlier were the changes related to balance sheet. Now we are moving to changes related to statement of profit and loss. That is our second part. So these are the information which are required to be given in the notes. So if there is any undisclosed income, there is any search and seizure going on, and AO has or AO find out some during the assessment some undisclosed income, some undisclosed case has been found out during that assessment. So all those will be considered as an undisclosed income. So in the notes we are required to give detail of that undisclosed income, and if it is related to prior periods, then we are required to restate our financial if it is material. If it is not material, then prospective effects we can give as per Ind AS 8. So, and whether previously income and related assets have been properly recorded or not in the books, that is disclosure is also required for undisclosed income. Then this point is also in line with the CARO 2020. So clause 3.8 of CARO also requires information for this point to be given by auditor, if applicable. So next point comes to for CSR, corporate social responsibility. Those companies who are required to follow CSR, they are required to give this disclosure. How much amount is required to spend, how much amount is expenditure incurred, how much is the shortfall, total previous year shortfall, reason for shortfall, nature of CSR activities, if any transaction done with of CSR with related party, if any provision is made with respect to liability, all these details are required for CSR activities. This point is also given in CARO 2020. Then third point is regarding cryptocurrency or virtual currency. If the company has done any cryptocurrency trading or cryptocurrency investment, then company has to give how much profit or loss it earned from those transactions, how much is currency involved, how much is currency held or deposit or advance from any person he has taken for the purpose of trading or investing in crypto or virtual currency. Then comes the next, grants or donation received will be shown as revenue from operation for Section 8 companies. So Section 8 companies are basically non-profit organizations. If they are receiving any grant or donation, they will be required to show as revenue from operations. Now comes third part, that is changes related to statement of changes in equity. In changes in equity, if there is any prior period errors, that is also required to be shown separately. Earlier, this in other equity, this column was there, but in equity share capital, this column was not there. So this time, MCA has added this column. He says that prior period error in equity share capital required to be shown as a separate column, and then a restated balance, and then change in equity share capital during the year, then closing balance. In statement of changes in equity comprises of two parts. First is equity share capital and another one is other equity. So in other equity, remeasurement of defined benefit plan and fair value change relating to on credit risk of financial liability designated at fair value through profit or loss will be shown as a separate column under reserves and surplus. Earlier they are shown as other comprehensive income, under other comprehensive income, but now they are required to be shown as a separate column under reserves and surplus. Defined benefits plans are basically remeasurement of defined benefit plans are basically employee benefit plans like gratuity, pension, all kinds of plans are there. Then fair value change relating to on credit risk of financial liability is basically an instrument issued which will be which is payable at, after 4 years, and the amount of that liability is keep on continuing change based on market, based on certain factors which are specified in that instrument, or the instrument is convertible in a variable number of equity shares. Then we are required to all the changes which come in that instrument will be routed through profit or loss. If the credit risk of the company increases or decreases, the change related to credit risk will be shown as part of other comprehensive income on the face of the statement of profit and loss, and will be categorized under reserves and surplus. Okay. Now there is a change on equity share capital. In equity share capital, now the company are required to disclose promoter shareholding also, Earlier, companies are required to give shareholding pattern for shareholding for more than 5%. Now this is an additional requirement. Some companies are required to give promoter shareholding also. So they are required to give promoter name, number of shares, total percentage of total shares, and change during the years. So even if a promoter is holding one share, name of that promoter will also come under this note. Earlier, if promoter is holding more than 5%, only then disclosure was required. Even if he is holding 10 shares, promoter name will come, and how much shares he is holding, percentage of how much he is holding as a percentage of total shares. Who are promoter? Promoter are the persons who are named as such in a prospectus or in the annual return filed by the company, or who control the affairs of the company, whose advice or directions or instructions the board of company is accustomed to act. Those will be considered as a promoter of the company. The point C will not apply if anyone is acting in a professional capacity. So number of shares, if he is holding different kind of equity or preference shares, all the details are required to be given separately. Now there are certain changes which are required to be given in the notes. These changes are in line with the CARO requirements. So first one is a title deeds of immovable property not held in the name of the company. If a company is having any immovable property and it is not registered in the name of the company, then disclosure is then that detail of that immovable property is required. Who is holding, who is its owner, who is where it is shown in the financials, all such kind of details. So it is covered under reporting on PPE in audit report also. If company has revalued any property, plant, equipment, right of use asset or intangible asset, then we are required to disclose whether that revaluation is done by a registered valuer or not. If it is, that disclosure is required. Where revaluation of property, plant and equipment and intangible asset is carried out, and the revalued amount is more than the net 10% of the net carrying amount of such class of asset, then a separate disclosure is required in reconciliation of gross carrying amount and net carrying amount. In the note which we prepare for PPE or intangible asset, if it exceeds 10% of its net carrying amount of that class, suppose there is a land is a class, and that is revalued, and its net carrying revaluation amount comes, asset is of 100 crore, land is of 100 crore, and that is revalued by 120 crore. Then a separate line item will come because it is exceeding 10% and land is a non-depreciable item. So it is exceeding by 10% of its net carrying amount. So it is a separate line item will become as revaluation of land in the disclosure of property, plant, equipment or other intangible asset. This is also required in CARO under clause 3(1)(d). Similar to that revaluation, there is also revaluation of investment property done. If it is whether it is done by a registered valuer, that is required to be disclosed. Investment property is not covered under CARO. If there is any property under Benami transaction in the books of
Paras bhai, you are not audible from last 2 minutes.
now audible.
Yes, please continue.
Okay. So loans or advance in the nature of loan granted to promoter, director, KMP, or the related parties are required to be on demand or without any term or period of repayment. Then that is required. If loan is, if any period repayment is specified or any term is specified, that
Paras bhai, voice is not clear, not audible. No voice, Paras bhai. No voice, Paras bhai.
hello.
Yes, now audible. Please
Hello.
continue.
Okay. So I'll start from loans or advances. Loans or advances in the nature of loan which are granted to promoter, director, KMP, or the related parties. These loans can be either repayable on demand or without specifying any term or period of repayment. That means for an indefinite period, if it is given to any promoter, directors, that required to be disclosed in the notes. So if loan or advance given with a specified term, means it is repayable by 5 years or period of repayment or terms are defined, then it will not, disclosure is not required. And second thing, loans or advance given to employees, to vendors, are not required to be disclosed in the notes. Now next point is number of layer of companies. As under clause 87 of section 2 and of the Companies Act, read with the company's restriction on number of layers, there are two layer of investments which are specified. Which are specified. So if a company is having more than two layer of subsidiaries, so that company is required to give name and sin of the company beyond the specified layer, and the relationship or extent of holding of the company in such downstream companies. So A company is having an 100% investment in B, B is having 100% investment in C, C is having 100% investment in D. So they are creating multiple subsidiaries. So till two level, that is till the level of C, it is allowed. So beyond that level, you have to give name and sin of the companies. Then utilization of borrowed fund and share premium, it is basically a provision of fund transfer. A company is giving advance or loan or investing, making some investment in B company, which is acting as an intermediary for the ultimate beneficiary, and B is giving that money to C or lending it or in making an investment in C company, or giving any guarantee or security to the bankers of C company. So here basic objective is to give benefit to A. So A has floated some intermediaries to give that benefit. So we are required to disclose all such kind of transactions in our notes. How much amount A has transferred to B, how much amount B has transferred to C. So how much guarantee or security has been provided by B to bankers for C, and the compliance of FEMA, Companies Act, and Prevention of Money Laundering Act is required to be checked. One second. This is a company transferring funds to another company. Similar way, if a company is receiving funds from another company with the ultimate objective of benefiting to ultimate beneficiary. Suppose B is a company which is receiving money from A, or A is making A is transferring funds, or A is lending, giving loan to B, or A is making an investment in B with the objective of transferring it to C. So B is transferring that funds as a loan to B to C, or making an investment in C, or providing a guarantee or security to the bankers of C. So that is again required to be disclosed in the notes. How much amount and date fund received from funding party, how much amount B has transferred to C, how much guarantee security provided by B, and declaration that FEMA, Companies Act, and Money Laundering Act has been complied. So with regard to borrowings, there are certain changes which had come, and these are basic from banker community. If you check, there are various changes which are amended and required now in the Schedule 3, like aging of trade payable, aging of trade receivable. These are all solves banker objectives. So they can easily assess now how much amount are given in the financial as per their aging. Similarly, there are certain other changes also which will help them. So if a company has borrowing from bank or financial institution on the basis of security of current assets, then they are required to disclose quarterly returns or statement of current asset filed with filed with bank are in agreement with books of accounts. They are required to, if these are not in agreement, then a reconciliation and reason of material discrepancy is required to be disclosed. So you have taken a loan, you are required to submit monthly statement, but here reconciliation with books of accounts is required only quarterly. And second thing is here security of current asset is given. This disclosure is applicable if you have taken a borrowing on the security of current asset. If you have taken a borrowing on the security of non-current asset, then this disclosure is not required. Normally for a listed companies, 45 days period is given for publishing their result, and bankers require monthly or quarterly statements to be given within 15 days, and auditors will now, after this amendment, they will check what all you submitted with the banker, and what is coming in your financials. So if any change is there, it is advisable to file a revised statement with the banker, and to avoid such a reconciliation or reason for material discrepancies. Whereas in CARO clause 2B of it mentions that we are required to give sanction if working capital limit is in excess of 5 crore rupees, then we are required to give a reconciliation disclosure if it is not in agreement with books of accounts. Whereas in notes there is no limit specified, so even if it is for 1 crore rupees, then also this reconciliation, if it is not tying up with books, required to be given. Or if it is required for only working capital, here all borrowings are covered. So any borrowing which have a security of current asset is required to be given in the notes if it is not reconciling with your books of accounts. If a company is a declared willful defaulter by any bank or financial institution, then date of declaration as willful defaulter, details of default, if any, are required to be given. Willful defaulters currently, if you check, these are like Gitanjali James is treated as a willful defaulter. There are RBI gives the information of who all are treated as willful defaulters, and this is also required to be disclosed in CARO 2020. If a company has taken a borrowing from bank or financial institution, then it has to then it is for a specific purpose. If that borrowing is not used for that specific purpose, company is required to disclose where they have used that fund. Okay, and in CARO here all borrowings are specified, whereas in CARO only term loans are specified, and that too taken from any person, including bank or financial institution. Here only bank, financial institutions are specified, whereas in CARO any person is specified, including bank, financial institutions. Then comes the registration of charge satisfaction with the ROC. When we take any borrowing, we are required to register charges with the ROC. So we are given a 30-day period for registration, and when the loan is repaid, NOC is filed with the ROC for satisfaction. Again, 30-day period is given. If there is it is not filed during the statutory period, then we are required to give detail and reason why there is a delay in the registration of charges or satisfaction with ROC. There are certain other changes which are required. We are required to give ratios in the notes, like current ratio, debt equity ratio, debt service coverage ratio, return on equity ratio, inventory turnover ratio, trade receivable ratio, trade receivable turnover ratio, trade payable turnover ratio, net capital turnover ratio, net profit ratio, return on capital employed, return on investments. And we are also required to give how we calculated it, what we considered it in numerator, what we considered in denominator for computing the above ratios. If as compared to previous year, if there is a change more than 25%, then we are required to give an explanation of that ratio. Then next is relationship with the stock of companies. ROC has MC has specified certain companies as stock of companies. If we have entered any transactions with the stock of companies, that required to be disclosed. I have given the link of the website where you can find stock of companies list. If you go to that link, there they are specifying means Mumbai, Bengaluru, Coimbatore, location-wise stock of companies list. So there is no consolidated list to get from that site, and that is also again in a PDF format. So if you have to consolidate all the PDFs, and then you have to compare it with your receivables, receivables or payables, or to assess whether any receivable or payable is falling under stock of company. Similarly, if you have made investment in any stock of company, that is required to be given. Shares held by stock of company, if any shares are held by shares of your company are held by stock of company, that are also required to be given. Even other outstanding balances are also required to be given. That is means other than receivable, if any amount is outstanding, if any other than payable, that is also required to be checked whether it is with any stock of company. Disclosure of that is also required. Now compliance with the approved scheme of arrangement. This is basically about merger amalgamation. If a company has take over any company, and it has accounted it in its book as per the scheme, and if there is any deviation, that deviation is required to be explained in the notes. So all assets, liabilities, whichever is taken, so it required to be in compliance with the scheme and the accounting standard. If any deviation is there, then we have to give it in the notes and the reason for the deviation. Rounding off. Earlier, rounding off was done on the basis of turnover. Now they have changed it to total income. If total income required to be considered, total income comprises of revenue from operation and other income. So if your total income is less than 100 crore, you can round off till the nearest 100,000, lakhs, or millions, or decimal thereof. If your total income is more than 100 crore, you can round it off to the nearest lakh or million or crores or decimals thereof. So we are now open for questions. Hello, Virag bhai.
Yes, sir. Yes, sir. You can check in the question tab, sir.
Yeah.
Participants are requested to post their question in the question tab. We'll take one by one all the questions.
Yeah, I will definitely share the presentation.
Sir, participants were asking that can we get the PPT of the presentation?
Yes, I can share it with you.
And one of our participants were asking that Binami transactions, when you were explaining about the Binami transactions, there was a audio problem. So can you please repeat on that?
Yeah. So company has entered into a Benami transaction. Property is not registered in the name of the company. That is considered as a Benami transaction. Somebody else is having the rights of the property, and a court case is going on. So any notice is given to. So company is required to give disclosure of that property. Detail of property, how much amount, who is the beneficiary, whether it is recorded in the books or not, nature of proceeding, status of the proceeding, and company's view whether it will be given to company or company will lose on it. Hello, is Benami transaction clear?
Yes, sir. Yes, sir. Sir, few more questions are there in the question tab.
Sir, in case a company fails to comply with some of the provisions, what is the penalty?
Penalty for what?
For non-compliance of the provisions.
Which provision? Because there are separate penalties are given for separate provisions. So if company registration of charge or satisfaction of charge is not done, then separate penalty is there. If you are non-complying with the layer of companies, then there is a separate penalty. So we need to check it in the Companies Act what penalty they have specified for the default.
Okay, sir. Next question is, how will we come to know how other company to whom we have lended loans have utilized those funds?
Utilize those funds. It is with regard to, I think this is with regard to intermediary and ultimate beneficiary. So if a parent is transferring funds to subsidiary and then it is transferring to ultimate beneficiaries, so this is a chain. Promoter or holding company or parent company knows where they are transferring funds. So they know that its purpose is to what is the end utilization of that fund transfer. So it is basically dealing with related parties. All the things they are. Charge with address.
Sir, one of the participants was asking, Mr. Kamlesh Kumar was asking, if the annual accounts are not rounded off, what will be the consequences?
Rounding off, even you can give till the 100. That I need to check. What are the penalties or any consequences for rounding if financials are not rounded? Or I think there are these are the rounding of for the convenience of the reader to read it. So if you are not rounding off, you are giving 50, that is okay. But this I have to check it out how there are any.
Okay, Sir Harinder Bakshi, one of the participant was asking, sir, what about the discount coupon?
I think that question is relating to the Chintan Bhai course, Udemy. So it's a course available on Udemy regarding this amendment, Schedule 3. So special 50 is the coupon code that will be informed to all the participants by mail. And meanwhile, Paras bhai, you can solve other queries, but I think there is some issue with the audio. So please check as well.
Yeah. Okay.
Mr. Shekhar Kanpal, one of our participant was asking, charge with ROC was created for X amount of secured loan from the bank. The limit was reduced later. However, the charge is not modified. Is there any penalty for this?
Is there any? But if charge.
Sir, your voice is not clear.
Yes, Paras just
Am I audible
reconnect.
now?
A little better, sir.
Okay. So I was regarding the charge. If charge created on the assets, if that is not modified, then the modification is not required to be submitted. If modification is required to be submitted, then that is also required to be submitted within 30 days. Hello. Hello.
Yes, sir. Yes, sir. Audible, sir.
So so regarding modification, you have to submit the modification request to the ROC within 30 days. If that is not submitted, then there is a penalty for it also.
And Miss Disha was asking how to check if there is undisclosed income.
Undisclosed income comes when some income tax officer comes he conducts a search or seizure, yeah, if he during the assessment income tax officer comes up with some undisclosed income, which is no, he is considering some other basis, he is disallowing some expenses which you have earlier shown as an expense. So these are items which will be considered as an undisclosed income. Recently, if you remember, there was a news regarding Hero MotoCorp that some undisclosed case was found out. So these are the cases that during search and seizure or during assessment, it comes as undisclosed income. Some bogus expenses you have booked in the real estate sector, or some, like I took an example of Hero MotoCorp. He is in real estate business as well as chartered flight business. So they have come up with news has come up with some undisclosed bogus expenses and undisclosed case. So similarly, when such events happen, then it will be considered as an undisclosed income. Otherwise, whatever you have disclosed as an income or as an expense will be considered as a true and fair expense or income.
Another question is from Ananda Padya. Whether aging is required for EMD and security deposit received from vendors lying in books as on 31st March 2022.
Can you repeat the question?
Whether aging is required for EMD and security deposit received from vendors lying in books as on 31st March 22.
No aging required for them.
I think we have taken the questions from the participants.
Okay.
Yeah. So, friends, thank you so much for all the patience hearing. We would like to thank you, our coordinator, Sika Pate. Let me come on screen as well. Thank you, ma'am, for the wonderful coordination and asking all the questions of the participants. She is practicing Chartered Accountant FCA at Navi Mumbai with the name Pate and Associates, which firm specialize in GST and other areas also, including consultancy and income tax. So thank you, ma'am, for the wonderful coordination, Ritika ji, and thank you, Paras sir, for the wonderful deliberation, a very deliberated and on timely basis you completed. There is so much demand of your presentation from the participant side. So we would like to tell everyone that Paras bhai will share the presentation with us and soon will share with all the participants. So thank you once again, all the participants. Thank you, Paras bhai, Chintan bhai, Ritika ma'am, and all associated, all the attendees. Thank you all.
Yeah, thank you, Virag. Thank you, Chintan bhai. Thank you, all the participants. Thanks a lot for joining this session. I am very happy that you spare your some time and come up for this session. Thanks a lot. I will definitely share the presentation for your future reference. Thanks a lot. Bye.
Thank you, Paras bhai. Thank you, Ritika ji. With this, we are concluding our today's session. Friends, we are coming up with a few more sessions. Be with us. Our next session is on Finance Act 2022, which is annexed recently. So all the updates with CA Vimal Punamya sir on the coming Saturday, not tomorrow, on 23rd, almost the same time, 5 to 7. So we'll announce all the details shortly. So be with us. Thank you so much, all the attendees.
Okay, thank
With
you,
this, we
sir.
are concluding our today's session. Thank you.